Welcome back to the Retirement Report. I'm Hank Parrott, your host. With me, my good friend and special guest, Dr. Friday with Dr. Friday's tax and financial firm in Brentwood, Tennessee. She's a tax expert for individuals and small business owners. We were talking about, well, you know what? I'm going to get this offer out there before I forget. For the first 10 callers to my office, 615-376-5325. You know, I work with Dr. Friday, as I mentioned. We, a lot of our clients, we refer back and forth, mainly because we enjoy working. We understand the same philosophies, if you will, about how the planning, if you will, should be for our clients. So we recognize the importance of planning year-round and of meeting with our clients on a regular basis and staying in touch. She does a lot of payroll stuff. She has a lot of small business owners, so she's not just, it's not just, working taxes a few months out of the year. This is a full-time, always there, kind of situation. And yeah, I know I've seen a lot. I've got clients that come in and they've got tax, where do you get your taxes? Oh, H&R Block or whatever it is, right? I'm like, we need to get some information, and good luck. Maybe next year, because they're not in the office, 9 months out of the year. So one of the things that the benefit we have is that in working together is we also like that team approach. So whether it's she and I, and also bringing in estate planning attorneys that we work with, this is another area where we can work together as a team and getting you a plan that's going to make the most sense for you. So when we talk about a comprehensive plan, if that involves also getting involved with tax stuff, I mean, if you've got a great relationship and you've had this tax person for a long time, certainly we're able to work with them. But if you're doing your own, or if you have, just one of these H&R Block type places where you're not really getting the tax planning piece, then we can bring Dr. Friday in and she can help with with doing it. You can meet with her. She'll come to the office. You can see the two of us together. As I mentioned with my clients, when we do at tax time, I go to all those meetings, and this is one of those areas again, working together to make sure that we're taking care of making sure the taxes are done correctly, of course, that the financial things that I do through the year are properly represented in the tax documents that, the 1099s and stuff as an example.
Every year for the last, I don't know how many years, have found at least a handful of errors on those documents every single time. And if we find it before the IRS, it just saves the headache for your clients, for our clients, not having to deal with the IRS. We get it fixed. A lot of times he gets it fixed on the spot, and then they refax us the proper form. We continue to finish the taxes, and then everyone's happy, and the IRS is actually getting the right documentation.
Exactly. I can call up the financial institution. Hey, we've got an error here. Can you please correct this? They'll typically get that done right there and send us a new one. If the client forgot a 1099, they missed, or maybe they didn't receive it and didn't know. Well, I'm looking at their accounts, and I gotta say, this is another thing with Friday that's noticed, is she's looking at your last year's tax return to make sure that anything from last year, that there's nothing missing for this year. And she'll ask. I mean, now sometimes things just change, of course, but she's going to make sure, she's at least going to ask the question, hey, you had this account last year, do you not have it anymore? And this is really big, because I've seen there again where accountants don't do that. I mean, where the tax preparer is not making sure that they've got everything, and so a 1099 can go missing, and all of a sudden, you're getting a love letter from, it's a terrible thing, it's a hate letter from the IRS saying that you owe money. I'm teasing.
I love them. They're love letters. They appreciate us. They're communicating.
What it means, though, is more tax, more penalties, that kind of stuff, and that's the part we don't like. So getting it right the first time. So that's why when we meet together, we do those things. So, and it's the same. So when I offer up the planning, understand that I'm as far as tax planning piece, working with retirement accounts, you have to have a lot of different knowledge areas there to do comprehensive planning and to take all things into consideration. Otherwise, you take an action thinking, oh, this is going to be a good thing, but it creates these other bad things, and the balance of that, there are other ways to accomplish it to where we can get the good thing without the bad things, okay? In other words, we don't have to take everything out of a retirement account and pay and have it bump us a tax bracket when we could do it, spread it out over a few years as needed. Taking income, understanding, well, if I need $100,000 a year to cover my expenses, I don't need to go take it all out of my 401k necessarily. Maybe I want to balance that out so that I can get the income I need, but keep me, let's say it's 120 as an example. All right, I need 120. Well, how about we make just 100 of it taxable, and the other 20 is going to come out of either tax-free or accounts that you're already paying tax on.
Right.
All right, so these are all ways we're always looking at how we can minimize taxes, minimize risk in a portfolio, so that in a bear market you're not going to get hit real hard and find yourself saying, oh my God, I'm going to run out of money if I'm not careful. I'm going to have to reduce my standard of living.
And
there are ways you can maintain standard of living.
And you always talk about how putting them in the right buckets. I always think of it, like, do you really want to have all your stock in an IRA? Yeah. Or whatever. He's great. I mean, I've listened to him for way too many years, let me tell you. But I always think it's wonderful, and I always put that little bit in people's ear and say, hey, you need to go find out, because he's got all kinds of little tricks up his sleeve.
And I'll share this little tip with you, but first let me finish out that 10 callers. I kind of got distracted a little bit. First 10 callers to my office, 615-376-5325. Tess is standing by. She'll get you information. She'll send you out a little checklist of things to bring to your appointment with me. And when you come in to see me, I'm going to go over all this with you. Again, we'll do tax planning, investment planning. We get into Social Security, when's the best time to take it, taxation of Social Security, understanding how that works, Medicare questions about health care and retirement, what those costs are going to be, and different options available to help you, again, reduce costs there as well. All of these things, and again, investments, it's not just what you make, it's what you keep. So it's about reducing taxes, but also about reducing risk in your portfolios. So we get into all kinds of factors here when it comes to comprehensive planning. When you come in to see me, 615-376-5325. When you come in to see me, I'll give you a free copy of my book, 7 Steps to Financial Freedom in Retirement. And I cover a lot of these different things in there as well. All right, so a quick tax tip, as Dr. Friday was alluding to, this is one where understanding how the tax code works. So if if you understand that stocks and stock mutual funds are going to be taxed at capital gains rates if they're outside of an IRA, okay? Bonds, whether inside or outside the IRA, are going to be taxed at ordinary income tax rates. So if I've got a traditional IRA, and I've got, let's say I've got $100,000 as an example in a traditional IRA and $100,000 in just a non-qualified investment account that I've saved money and invested in stocks over the years. Well, if I've got 2 such accounts, and you can, $100,000 each, $250 each, $500,000 each, $1 million each, the same principle applies, right? And what it is that when I have my money in that IRA, okay, it's going to be taxed at ordinary income tax rates. I might as well put bonds in there, right? So let's say I've got a 50-50 portfolio, 50% stocks, 50% bonds. Modern portfolio, very common today. And in that scenario, I want to have all my stocks then outside of the IRA. I want to have them in that other account that's going to be taxed at capital gains rates, and I'll put all my bonds in the IRA. So rather than have a 50-50 portfolio in my IRA and a 50-50 portfolio outside of it, I can still have my 50-50 portfolio. I'm just going to have 100% stocks in my non-qualified account and 100% bonds in my IRA. All right, so now let's think about this even further. So that's a great way. Now my bonds are going to be taxed the same, no harm there, and I'm going to get capital gains rates, and we just went over, right? The brackets are always going to be higher, right? The tax rates are always going to be higher on those brackets than it is on capital gains rates. Right. If you're in a 10 or 12% bracket, you pay 0 tax. Definitely lower, okay? If you're above that and 15% tax, well, otherwise you'd be paying 22 or 24 or whatever it would be. Now, guess what? There are other parts to this. All right, not only that's a real simple one, right? But there's more. What about Roth IRAs? How would I incorporate that into this equation? All right. Well, that's my tease. We're going to take a break. And when we come back, I'll show you how you can hold your investment accounts when it comes to Roth, how you can use that for tax efficiency in terms of where do I put my stocks and bonds when it comes to tax-free. I'll tell you when we come back. Join us here. We'll be right back on the Retirement Report.